GetCrack. Wake up, motherfucker.
All right, what's up, guys? June 11th. Okay, all right. So, I don't know, I was pretty bored. As I told you guys, go sideways. We went sideways. Are we done going sideways? Let's see. If we're not, then it's going to get a lot more annoying to me, personally. This is the kind of BS that you will expect when you lose your trend. When you lose your trend, this is what happens. You go sideways, tricking everybody. Everybody thinks it's going to be bearish, then another guy's going to be bullish, back and forth, going nowhere. Truly waste of my time. And that's what they call a crab market, I guess. You know, they have a meme for it. Here, let me show you the meme. I don't know if you guys know the meme. You know, back when we had COVID, everybody started learning about markets for the first time. I guess these guys made memes about it. You have three people here. Okay. We have the Bobo, the bear. You have the Moo, the bull. And you have Snibs, the crab. Actually, my PFP on Kick is the crab one. And, you know, you're not supposed to pick a side, okay? The market can do three things: go down, go up, go sideways. It has nothing to do with your actual position. If you think you put a bet on something and somebody's manipulating it because you could not tell what it was going to do, that's your fault, really. I mean, sure, there's definitely going to be manipulation, but you should be able to analyze and figure out when that manipulation is going to come in. How many times have we talked about Taco? Do you really think you're going to have a war? Do you really think these people don't know you were thinking that ahead of time and was just going to fake you out? Apparently so. Apparently there were enough idiots thinking bearish yesterday, and we're going to continue on today. And they did not think they were being used to create fuel for the next move up. Now, is the next move up actually going to be the move up, or is it just going to make another complex pattern? Everything's about patterns, guys. Patterns upon patterns. And complex patterns to me is not good. I rather would have had a nice, clean, bearish move on Monday morning, scared everybody out of the pool, reversed into the afternoon, shot up all the way to the top of the range, created a range at the top rather than at the bottom. Okay, that is the problem we have now going into SpaceX IPO tomorrow. And apparently a lot of people are taking out loans to get more money to get ready to buy SpaceX shares. Oh, that's really great. Really great. Nice. Just like the Koreans getting loans to buy their stock market. That's exactly what you want to see in a bubble. Perfect. Perfect. So you could tell I've been here before. I've done this so many times. I've seen this so many times. Nothing is really surprising to me. And like I said yesterday, you probably should buy Bitcoin or gold because they were telling everyone to be bearish the last few days. And I'm like, oh, great. If everybody's going to say bearish things, then you know what's going to happen? It's going to do the opposite because the crowd is always stupid. The masses are always asses. They are dumb. They follow CNBC, they follow Bloomberg, they follow mainstream media. Anytime I hear something in the crowd, I'm always going to bet against you. That's just the truth. That's how you win. You're always going to have to be contrarian. And it's really doubly so when you get into a range like this. So let's see where we're at. We were already in a range in Bitcoin over here. All right. And then we escaped that range for a little while. And now we went back down. Not good. See, we could have made a range up here at a higher level before continuing up. But we didn't. We went back down, got everyone bearish, laugh at Michael Saylor. Who cares? And now what? What's this? What do I do with this exactly? I can't do anything with this. The best I could do is bet on it going up back here before going down, I suppose. I don't know. I don't know what I'm supposed to do with this. It's definitely not going to bounce and continue on up above 196 on MSTR. I don't know if Bitcoin will get above 80K, really, at this point, looking at this. We're done with this week tomorrow. This candle here is terrible. This is a joke of a candle. All right. Now let's look at gold. Look at gold. Probably similar, right? Pretty similar. Terrible. Look at that. Like I said, it's like, what's this? What's this? So next week, are we going down again and then go back up? Oh my God. This is annoying. Very annoying. This is terrible. You really can't do much with this. Short term, yeah, I suppose it will do something and try to get up. But we got Kevin Warsh and we got options expiring next week. Okay, so that's the problem. That's gonna be a problem. You have to get through that. This is not good. This is not where you want to be. You can't really understand what it's gonna do because the bottom of the range will be down here. The top is up here now, and you're just in the middle. There's no edge here. You could either go down or up. You don't know. It's 50-50 at this point, just based on looking at this. And if you look at MSTR, it's a slightly better, I suppose, because MSTR is at the bottom of its range. If you look at Bitcoin itself, it looks worse. MSTR, like this level here at 109, should be very important. It should try to hold that. You're closer to 109 compared to where GDX is to its bottom. Okay, and let's look at Bitcoin. Let's look at that. Look at that piece of crap. Look at that. See, Bitcoin, you could definitely go down here very easily, somewhere down here. So that's why it's riskier, right? If you just look at MSTR looks like it's done. And so that's why when you look at Bitcoin and MSTR, they look different, right? When you look at Bitcoin here, people probably were expecting, well, hey, look, it should come over here first before going back down at least, right? So we have some room to move up. If you look at MSTR, it was finished. That was a thing. Yeah. And if you look at the weekly candle here, it looks worse, right? One green candle here, one red candle here, very large candles. And that would have told you like, whoopsie, we're going to have problems. Now, if you look at MSTR, it was done. It was complete. We were on top here, which matches the top over here. So for MSTR, we're finished. For MSTR, it looks like we're finished. So if we just base our decision on MSTR, I guess we're done. If we base our decision on Bitcoin, it looks like we have further to go. So the Bitcoin range is wider than MSTR when you just look at it in terms of where the resistance and support is. Okay. But I think MSTR probably should follow that, I guess. I don't know. I think I'd rather follow the MSTR chart than the Bitcoin chart, just based on how I perceive it. Let's see. So let's see. Going down here, 45% move down. So from this level to this level will be a 78% move up. Okay. If we look at the commiserate Bitcoin move, let's see. How much? 27, 28. You see, MSTR is more of a leverage play of Bitcoin, 38%. So that's why I rather trust what MSTR does, because MSTR is more extreme, even though like the range looks smaller in terms of absolute dollars. When you look at percentage, MSTR is wider in range. Okay. So that's why you always have to use the log scale, right? You don't use the dollar amount. You have to use the percent amount. It's the percentage matters, not the dollar amount. Okay. So that's why you use the log scale on your charts. That's one reason to look at it that way. All right, done with that. So I gave you my analysis on those two. It's up to you what you want to do. With that information, never again. Worst part is I predicted all this last week's low. Let's set my price up, but I didn't hold the line. Well, yeah, it's there to shake you out. That's the whole point. It's psychology. Everything is psychology. I never cared about any of this. This is just noise to me. This is all noise. The trend is up. The trend is up, right? The trend is up. If you just look at a long-term chart, look at the weekly chart of HUT or IREN or anybody else, why would you care? Honestly, why would you care about any of this? If I just look at the weekly chart, this just looks like a burp and a fart. It looks like a burp and a fart. If I look at like a daily chart or a 78-minute chart, you'll be like, what the fuck? Holy shit, the world's ending. Or it's bullish again, Oh yeah, we're going back up. Dude, this is meaningless. This is noise. This is the noise you would expect. This is a high beta stock. HUT and IREN and CIFR, all these stocks, Rocket Lab, all of them, they move up and down 10, 15% like it's nothing. It's a normal day. Okay? And actually, this is a good time to talk about the VIX. So we should talk about the VIX a little bit, since I guess you guys need to understand how to measure volatility. Okay? Single stock volatility is generally higher than index volatility. Right? There you go. See? So look at the VIX. Look at the VIX. What is VIX? What does VIX mean? One thing you should know about the VIX is you should not plot this in log scale. Okay? Log scale makes no sense. Okay? You should not plot this in log scale. The other thing about looking at the VIX is you should not be drawing trend lines on the VIX. Nobody here should be drawing like down trends or like up trends or triangles or whatever BS. This is definitely not the place to be doing technical analysis like that. You could do levels. That's perfectly fine. Levels are fine. You could do this. That's okay. You could do that. That's okay. Okay, that has some form of meaning, but otherwise you should not be doing any trend lines. You probably shouldn't be doing any indicators, I suppose. I mean, this indicator might be useful. Okay, so let's say you look at the ADX of this thing. What does that mean? This means that we have a lot of calm weather here. Okay, so this is calm weather. The VIX is not doing anything really. It's moving in a nice and tight range. There's no volatility of volatility. So the volatility of the volatility is low. Okay, that's what this means. This indicator is measuring the volatility of volatility. Volatility is what you're measuring, and now the indicator is measuring that. So this is the volatility of volatility. That is called the VVIX. VVIX is the volatility. You can look that up. So if the volatility of volatility is low, then we should not expect any crazy things happening in the market, right? Okay, so anytime you start seeing creepiness like this, so this thing is kind of creeping upwards, you're like, wait a minute, why is this moving up now? What does that mean? That means under the surface volatility, the implied volatility, meaning the expectation of volatility, is going up. And it was going up into the Iran war, all right, over here. So there's some kind of information being given with volatility. Now, this is only the volatility of the SPX, the S&P 500. Now, I told you guys about this other measure of volatility, VIX EQ. VIX EQ, what is that? VIX EQ is the volatility of the single stock. That means if I took 500 stocks of the S&P 500 and I measured them independently, not as one index. If I measured it as one index, I got to use the normal VIX, and that's influenced largely by market cap weighted stocks, right? So the measure of the VIX itself is probably dominated by, guess what? Semiconductors, probably. Now, semiconductors is 40% of the whole damn thing, 40 to 50%. that's going to have a large influence. Now, if you look here, let's look back at last year, September to October. If you looked at that, you saw it going up. It's moving up. It's moving up into October. What happened in October? By the time we hit Halloween, we crashed a little bit, right? So underneath the surface, volatility of the single stock was moving up. Okay. Now, what happened here? This was from Christmas into February. Again, volatility was creeping up for the single stock. Interesting. Why was it doing that, huh? Was it in preparation for Iran? I wonder. Now, here we go here. Things are getting kind of tight. We are in this range for the most part this year. We're between 40 and 45. What do these numbers mean? What is 40 and 45? Why did I say don't use the log? What this means is actually a percentage base result here, 40 and 45. This is actually the variance, okay? So this is statistics. So this index measures the options market, and it's based on a statistical number, all right? So there's something called the rule of 16. The square root of 256 is 16. There are roughly 252 days, trading days in a year. So square root of 252 might as well be 16, right? Square root of 256 is 16. So this is just a rule of thumb. We just say it's 16. You just divide the number by 16. And what you'll get is that if you took 40 and 45 divided by 16, that gives you the percentage that you would expect a single stock on the S&P 500 to move up and down. So let me just say it's 45, okay? 45 divided by 16 is about 2.8%. Okay? So for a single stock in the S&P 500, I expect it to go up and down by 2.8%. Okay? That's a lot different from the normal VIX. The normal VIX, we have a different number, right? Because the S&P 500 index should be less volatile than a single stock. That's why boomers will generally buy an ETF that tracks the S&P 500. They don't like to see their portfolio go up and down 2.8% every day. They want to see their portfolios go up and down probably 0.5%. That's what they like. They don't want to see crazy volatility. They want to be calm and less emotional. People tell them to buy the S&P 500. So right now, the S&P 500 VIX is 19.4. So let's say it's 20. Okay, 20 divided by 16 means we have a volatility right now of 1.25%. 1.25% is the volatility you should expect every day right now. Okay, so when we came into June, you see the volatility was going down. Okay, this was the Iran war. Volatility started shooting up. Now we were going down after the taco, right? Taco happened here, April 8th. After the taco, volatility slammed down. Everybody got happy. Everybody started the bubble because stocks could start moving up and people were not worried about it going down. And that's why volatility is going down. Now, go back 2 weeks ago. We were talking with that nerd. That nerd said, something weird is happening. VIX is going up and volatility is going up. I mean, the S&P is going up. So the S&P and volatility were going up together. Spot vol was going up together. That's what spot vol means. And that's unusual. Now, I was like, what are you talking about? VIX is going down. What are you talking about? Well, the VIX for the index is going down, but the VIX for the single stock was not going down. Okay, so if we look at VIX EQ again, it wasn't going down, was it? There's something strange going on here. It was in a range. So probably somebody out there is charging you $500 a month and they got a special VIX. Maybe their VIX is showing it going up in a straight line, but even here we see it going sideways. However, there is a difference though, right? For the S&P 500, the volatility is going down, but for the single stock, The volatility is still elevated. We're still up here. We're still in this range here. Um, we were lower last year in December around Christmas, but we've been staying at this high level all throughout February up till now for some reason. All right. So even with the Iran stuff, we were still here. Very interesting, very strange, very peculiar, I would say. So anyway, yeah, for the index, it looks like volatility is going down, but for every single stock, the volatility is going up. Okay. And then if you pick some crazy stock like Intel, Micron, or whatever, do you think the volatility will be low? No, I don't think so. Volatility is going to keep going up again. We're just going to keep going up again. Okay. So that's what we're seeing right now. And this is like a fart and a burp. This is not a big move up like we saw here. So if anybody wants to say like, oh, the bubble is gonna pop right now like crazy, no, it didn't. It just popped a little bit, but it's not fully popped. It's not fully popped. Either we gotta pop it next week, or we're just gonna go up again next week. This thing is gonna slam back down. People are gonna get more and more bullish down here at a lower VIX level, and then we'll have a bigger pop come July, sometime in July. I don't know when. All right, July or August, and that's what's gonna happen probably. Okay, hopefully you understand that. Let me put up the little thing here so it summarizes what I just said about the VIX, and you can do your own mathematics and you can do your own statistics or whatever you want to do. But that's exactly what the options market does. It's controlling this market right now. And the closer we get to expirations, it controls it more and more and more and more. And I had a little funny comment, this from my last stream. So Ugg was like this. Ugg was saying people should set their stops based on time rather than price. For example, sell after 30 minutes instead of a price level. Then they won't get stopped out because of emotions. You know, the ironic thing about that comment is that would be true if people just bought and sold shares, but they don't right now, right? More and more people buy options. Time is price in the options world. Options have a time limit on them. Options and futures have a contract that ends at a certain time. The closer you get to that end date, like next week Thursday is options expiration, okay, for the quarter. So the less time you have, the crazier and crazier the price of that options will be. So in the options world, time is price. And it's quite hard for you not to get emotional when the closer you get to that expiration, the price on that option starts going up and down thousands of percents. I think when people don't trade options, they don't really understand that. And this is why I avoid trading options. I don't like that shit. I do not want to determine when I sell, when I buy, based on the time, based on the price, and based on volatility. I do not want to think in 3 dimensions. And that's just 3 variables. Actually, there's more dimensions, right? We looked at delta, gamma, theta. Dude, those are derivatives of price, time, and volatility. So you're going to think in multiple dimensions, partial differentiation equations. I'm not interested in doing that. I retired. Okay. I'm not doing engineering anymore. I want to make my money nice and easily in a retarded way, in a simple way. I don't ever want to think about VIX. I don't ever want to think about time. I don't ever want to think about anything other than there's a price that I want to hit. And I don't want you options idiots getting in my way, because you guys are getting in my way. We could have already puked everything out on Monday. HUT could have been well above $200 right now, but you option morons screwed it up. You guys did this and this and this. You guys want it to do this. You guys want my HUT to do that. I bought HUT here. I bought HUT here. I want to sell over here, but you idiots want to do leverage with options and you're going to make it do this. That's what you guys are doing to this stock right now with options. This is all because of options, not anything in reality. All because you have VIX and Vega and Gamma and blah, blah, blah. Wasting my time. It was so much easier during the boomer days when people didn't understand options, but now everybody wants to play options and they screwed everything up. Everybody wants to think they're like Druckenmiller and Soros and blah de blah. And yeah, right. You guys barely passed calculus. And you're telling me all you guys are going to jump in and learn how to do call options and put options? Yeah, right. Yeah, right. Actually, most people right now are failing intermediate basic mathematics in college level because all of them got A's in algebra, I guess. So there's this whole debate of like people trying to reinstate the SATs, the ACTs, and all that because once they got rid of standardized testing, people can't even take first year basic calculus courses. It's like, dude, this is pathetic. And you guys really think you can understand how to trade options. And by you guys doing this, you guys ruin my plays here because this thing should have been at 200 by now, but you didn't do it. See? And that's why we have this issue here. That's why we have all these issues. There's too many morons in the market that want to play options. So there you go. Yo, Crack, why you didn't get a second degree in economics or finance? I thought about doing that because in Berkeley they had like a master's, a fast track master's degree in quantitative finance. I thought about doing that, but yeah, I was just like, is it worth paying all that money? So it's just like a quick 1 to 2 year program in Berkeley, UC Berkeley, and you can do quantitative finance. So that would be very, very useful for some of you guys if you really want it, because then you could leverage it to go into hedge funds. If some of you people actually love doing this, then yeah, go ahead and take that. There's no real prerequisite except like you just need to know math. If you know enough math, and I don't think you need to know too much other in economics or anything like that. I did take AP economics in high school, but I was never interested in economics that much. So this wasn't my passion. None of this is my passion. So that's why you see me like whatever, not important. I was pinned and came 50 cents of self amputation. Yeah. God. What? Yeah, well, I don't know. What can I tell you? I'm sure they know where you are, where your orders are in, right? They know where your orders. The brokerages, they sell they sell their order book to the big guys. So that's why you don't have to pay a fee or very little of a fee now when you trade, because they front run you. You put in an order and then they sell that order book to the big guys in milliseconds, in microseconds. So the big boys, they see your order book, they see where you put all your orders, and then they'll make sure you'll never hit it. They'll go next to it and then they'll move on. And that's why a lot of times you don't hit your orders. If I can make money without learning market trigonometry, I'll skip it. Yeah. I don't think you need it, but it is annoying though, because it does create this kind of event here that you have to come to realize is the nature of the market right now. This whole noise is created by options. Yeah. Every time we get close to options expiration, you keep seeing this noise here, options, this noise here, options, this noise here, options. See, every time you get towards the end of the month, end of the month, end of the month, and then when you get to the third month, right, this becomes bigger, right? Because it's a quarterly expiration, not just a monthly. Every week there's an options expiration. Every month there's an options expiration. But every quarter it's even bigger. The biggest ones are always the quarter expiration right there. This one was at the end of March, right? There's a quarterly expiration. You can see that right there. Once we flushed out every options that was built up from January to March, we finally got to escape. And again, once we finish all this options expiration, we finally can escape. Do we escape this way or do we escape going down? That's the question. You don't know until all the options are wiped out. That's the problem. Yeah. So, yeah. So not only you have to worry about earnings, you have to worry about options expiration. Always, this is always the problem. All the time. All the time. And that's why you always have the cycles built up. That's why the cycles don't come from nowhere, right? Well, how come the cycles say March is a good place to buy the dip and then June is the place to sell the rip? The cycle said that. Well, probably because over how many periods of activity, everything magnifies at the end of the third month, and that's why you create all this chaos going in there, and it's always repeatable. It always repeats. It keeps happening. It's not something to surprise you. I don't know, if you turn on CNBC, if I was in charge of CNBC, this is all I would say. It's like, watch out for options expiration. Here we come, and that's it. Don't even talk about anything else. Everything else is just more noise on top of that, because it's just people trying to drive the price around that options expiration the way they want to, so they make as much money as they can on the options. Because remember, the big boys, they sell you options, right? The little guys, they buy the options. The big boys, they sell the options. They want you to move that price in a way that they maximize their profit from selling you that option way back in March. Okay, so every time March hits, you buy options for June expiration. And then once you get the June expiration, you got to wait for the next 3 months, right? And then you got July, August, and then September. So September expirations all the way out here, everybody starts buying for the next quarter and they're selling you that. And then again, it repeats over and over and over and over and over again. It never ends like that. Okay. So that's why it doesn't matter. I'm trusting the cycles on gold, Craig. It delivers. Okay. Yeah. So, yeah, I think gold should probably go up now. You know what's interesting? The chairman of the Bank of Japan is in the hospital right now. So next week, the Bank of Japan will have its decision, but the person talking won't be the guy who was supposed to be in charge. So that's interesting, right? That's going to be fun. We're going to have some temporary guy talking in the Bank of Japan next week. We have a new guy, Kevin Warsh, talking for the Fed next week. You think somebody made that dude sick before next week? You think a JP Morgan spy went into Japan, fed him some fugu, and then he got poisoned, and now he can't show up next week? See, the big guys, they manipulate things at a higher level. Okay, crypto is like low level, right? Crypto is just a bunch of nerds in their basement trying to manipulate and pump and dump with like a few hundreds of thousands of dollars. The big boys up there, they're manipulating at a higher level here, at a very high level. Okay, so that's why it doesn't matter which president you pick or whatever. All these people can be fucked with, right? I mean, you saw the Epstein stuff. Anybody you think is powerful is not really powerful. There's somebody behind that guy manipulating stuff. All right? There's powerful people behind those so-called powerful people. And those are the people you never see, you never hear about. They're not going to be talked about on the news. They're just behind the scenes with the strings pulling and pushing everyone just to get that options market to do what they're doing. Just to get that extra $1 billion. They're just fighting over like $1 billion. because they have trillions of dollars. They're just fighting over $1 billion. And they don't need that billions of dollars. I think they just do it because it's an ego trip. You know, once you get so much money, it doesn't matter like $1 billion here, $1 billion there. That's nothing. That's just like a rounding error in their checkbook, right? What they're really doing is they're just getting off on having the power. Oh, look at me. I can poison this Japanese dude and then fuck with the options market. Ha 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 ha. You know, that's what they're doing. They get off on that. They play at a way higher level. So, which is annoying, which is very annoying, you know? So I'm really tired of that shit. I just want to make a few 100,000 here or there. Okay, guys, can you guys fuck off a bit and stop messing around with the markets? Anyhow, so I think this year was a good time to practice. Okay, you guys understand a little bit here and there, so that's good. We have a lot of stocks to get through, so I don't know if I can get through them today, but I have a lot of articles now to waste time reading too. Fuck, man. So let me put up the VIX stuff. I forgot. I just forgot. I just babbled and forgot. Here, okay, take a screenshot of this. Okay, so this summarizes what I said about the VIX, the rule of 16. Okay, take your screenshot here. Let me get rid of this banner. Oh my god, where is it? Fucking shit. Get rid of this banner. Okay, take a screenshot of this. All right, the calculation. VIX divided by 256, square root of 256 refers to the finance rule of 16. It converts the annualized percentage-based CBOE volatility index VIX into an estimate of the expected one-day percentage move for the S&P 500. The square root of 256 is exactly 16. Therefore, we get the daily expected move. You divide the VIX by reading by 16. So every number you get on that VIX is a percentage. That's why you shouldn't use log on it, okay? It makes no sense. If you do log scale on a percentage-based number, that's like, yeah, that makes absolutely no sense. Why would you do that? It's already percentage-based. So the reason you do log on a price scale on a normal stock is because you want the percentage-based image. You don't want the absolute value. Absolute value is nothing. If I go like $1 to $2, that's a 50%, 100% move, right? $1 to $2. And if I go to 2 to 1, that's a 50% cut. So I want to turn that into log scale. All right. I don't want to get tricked because like a penny stock is moving between $1 and $2 versus a bigger stock going between 100 and 110, right? So I want it to be percentage based. But for a VIX, everything is percentage based already. There's no point in doing log. So don't do log. That's a newbie mistake. And then you divide by 16 because why? Real world context. There are roughly 252 trading days in a year. 16, the square root of 256, is used as a convenient simplified shortcut to annualize or de-annualize volatility. That's why we do that. We are annualizing everything to a day. We want to know what it is within one day. I don't care about like what it will do over 1 year. I want to care about what the expected volatility is from day to day. So that's why I do that. All right. So the square root of 256 is 16, is used as a convenient simplified shortcut. All right. And this means the market is pricing in a 68.3% probability, that's one standard deviation, that the S&P 500 will stay within this calculated daily range. So that's where you get your statistics from. That is, if you look at a bell curve, right, you got the standard deviation, sigma, left and right. And so 68% of it is going to land within this area. So that's how you get your stats. So if you look at your VIX, you can probably predict where the S&P is going to be within that day today. And from there, you could probably figure out expected value and blah, blah, blah. Go take a probability statistics class for that. I'm not gonna discuss that anymore here. Okay, I think you understand. Hopefully you understand. If you don't understand, there's plenty of courses online that teaches statistics. But for now, what you see is like take your VIX number divided by 16. Okay, and we learned today that an index is less volatile than a single stock, right? We had 40 to 45 for a single stock VIX. For the index level VIX, we had a 20, right? A 20. So 20 divided by 16 was about, what was that? What did I say? 1.25 or something, right? For the index. And then if you did single stock, you took 45 divided by 16, you had like 2.8% or something like that. And then if you look at something like HUT, Intel, Micron, what else? What else is very volatile today? Rocket Lab. It's probably if you took that stock and then tried to compute its VIX and divided by 16, you'll probably see a really high level where you say like, oh shoot, this is like a 10-20% stock. So that's normal. So whenever you have a VIX going up or down 1%, that's huge. Okay. It might not look huge to you, but it's huge for the normal expected value, right? We don't want to see the S&P 500 go up and down 1%. That is very, very volatile, very volatile. So when you see a VIX of 16, that's bad. When you see a VIX of 24, 1.5%, that's worse. When you see a VIX of 32, holy crap, that means the market is going to puke. And so translate that into your single stock. Guess what's going to happen when the market goes up and down 2%? Look at HUT. HUT will go up and down probably 15, 20%, 30%. That's normal within one day. So when you do leverage on something like HUT, you don't want to be around when the VIX is high. But we're in a weird state where the VIX is high, but the stock is moving up. That means we're in a bubble. We're in a bubble. So you're going to see Intel go up to $200. I said Intel was going to go up to 200, right? That's what I predicted Intel to go. I think Intel is going to go that way. Yeah, for sure. For sure. So let's look back here. Let me turn on my log again. See, I turn on my log. It looks a little bit different, right? I turn off my log. I want always everything in percentage. If I look at Intel, what did I see today? Perfect. It's in a range. Okay. It went underneath the range. It went back into the range. We're over here right now at $117 about. When this thing breaks out, we're going up to 200, no problem. This is going to go to 200. We're going to go from 116 right now to 200. So if you bought here on Friday at 99, don't worry. You're going to see 200 unless next week everything collapses. So we have to pass through next week, though. We got to pass through next week. And even after next week, you're probably not safe because Micron has earnings the last full week of June. Okay, Micron has earnings, I think, on the 24th of June. So you got to pass through that. And even after you pass through that, you still got to wait for the last day, the last trading day of June at Tuesday, the 30th. So another couple weeks after that, because the JP Morgan caller, the options of the JP Morgan caller is going to have to readjust. So maybe a lot of people are going to go crazy and try to close all their shares, things like that, before all those options get cleared away. Oh my God. So don't think this is over. Don't think this is over. We're going to have a lot of trouble coming up. Very annoying, very irritating to me. Yeah. All right. Let's see. What else? I'm behind. Gotta catch up. Yeah. What's up, Ugg? What's up? Intel looks like a downward parallel channel for now. Yeah. I'm not looking. Yeah. You could draw that if you want. Yeah. You could be like, oh, look at that. This is it. And be like, oh, it's a flag. It's a flag. It's a flag. This is a flag. This is a flag. Oh yeah. You could look at it like that. I mean, I'm just like, dude, man, just sort your shit out. Just sort your shit out. Where do you get 1640? Where does it show the value? These are just rule of thumbs. So that's it. That's from that image. That has nothing to do with anything. These are just rules of thumb. These are just rules of thumb, okay? Because it's very convenient to remember 16, 24, and 32 because it corresponds to 1, 1.5, and 2%. That's it. That's all it is. Unless you want to do the math in your head every time you look at VIX. That's up to you. But most people, they'll just remember 3 numbers. They go like, look for 16, how close it is to 16, 32, 24, and then you got your percentage based on 1%, 1.5%, and 2%. That's easy. That's all it is. Yo, Crack, let's have nerd night and power through these. What is that? Okay, let me screenshot this. I'll get back to you. Okay. All right. I'll screenshot that. So this is used to project direction or just amount in either direction. It's just used to project the spread of the move every day. Yeah. That's just implied though, implied volatility, not what's actually going to happen. That's what people expect will happen. So there's a big difference there. Sometimes implied volatility does not actually mean real volatility. That's all it is. It's just a statistic. Yeah. It's just a probability, right? Doesn't mean what's going to happen. You know, and that's why the rules of the game always changes, right? If I go to a casino, I know exactly the odds of me rolling the dice. I have 2 dice. I know exactly the probability of a 7, of a snake eyes, right? I know the exact probability, but the options world, the probability keeps changing, right? So the odds of me getting up and down 1% is determined by what people expect it to be. That's why the market moves in a certain way now, being controlled by these options. Before, the options didn't control that because the options market was a small part of the whole overall mechanic of the market. Okay, options were introduced in the 1970s. 1970s to 1980s were the early days of options. People were still buying and selling shares. That was the predominant way of manipulating the price, was that you had to buy and sell a lot of shares. But with the options market maturing into the 90s, the early aughts, whatever, now we see the options market now controls a lot of the market moves today. So the dice that I roll is changing shape. First, it was a cube, then it's a tetrahedron, then it's something else. Now you understand? That's why this casino is a lot more complex. It's no longer something where I could say, like, oh, yeah, I know the probability. I know the probability day to day. Do I really, though? Nope. I know, but I'm saying, where do you get the number from the chart? No, that's the DeMark indicator. DeMark indicator, I already went over. I said DeMark indicator was 1,000 for Micron, 200, about 180, I guess, for Intel. So DeMark indicator gave me that. We hit 1,000 already on Micron. The next target will be 180 for Intel. So Micron, it already hit. See, Micron hit it perfectly, right? We hit Micron perfectly at 1K before pulling back. The next target for Micron is 1,200. That'll be the next target. If it makes it out of here, the next target will be 1,200. So that's it. That's where you got the targets from. I mean, you could do your point and figure. You could do your point and figure on this too and see if it's true. Do your point and figure on Intel. Intel has a very clean range right here. If I do the point and figure based on this range, right? I have a climax over here. I have a climax down here. I could pretty much compute right now what the target would be if this thing breaks out, right? You could just do it right now. Just count the point and figure of this thing right here. See if it goes to 200. That question was about your VIX screen a while back. Where do you get the value from the chart that you then divide by 16? You mean why the VIX is at the level it is? Like, why is it at 220 right here? Is that what you're asking? Are you asking why is it at 19 point whatever? Why is it around 20? I mean, that's what the CBOE gives me. The Chicago Board of Options, that's what it gives me. You can look it up yourself. I didn't compute this. This is a mathematical equation. So based on the options market today, this is the number that they give me on the VIX. I didn't come up with this number. It's the CBOE that comes up with this number. And then the same thing with the VIX EQ. It's the CBOE that gives me this number. So I have to believe them because they are in charge of the options market. Do you just take the price of VIX divided by? Yes, that's what you do. That's exactly what I'm saying. Because 16 is a square root of 256. There's 252 days in the options, in the trading days in the year. So 252 is close to 256, right? So that's why you get the rule of 16, because square root of 252 is close to square root of 256. That's how you get the number 16. Because I want to get the measurement of the day, not the measurement over the year. There's a VIX chart you can look up. Yeah, that's what I'm showing right here. Yep. Yep, correct. Yep, that's what Kyle was saying. Yep. That's because I'm real time. All right, Ugg. Yeah, hopefully you understand that. I know this is hard for first timers. Most people don't understand the VIX at all. Most people, they just look at the VIX and they start drawing trend lines right here, right? They go like, oh, look, there's a trend. There's a trend. The VIX is like this. Oh, this is a trend. This is a triangle. This is going to crash, or or this is going to pop. I don't know, man. You guys shouldn't be doing that. That's not what a VIX does, dude. All right. Yeah, I got the VIX up. Just didn't know where the main value came from. Yeah, you can look up. It's a mathematical equation. It's definitely, it's just most people don't even bother looking at where it's derived. They have the, but yeah, it's math. It's math up top of math. So that's why when I say like people are betting, people are betting. Yeah, see, this is the basic understanding. High is bad. Low is good. Actually, wrong, because right now, because of the options market, high is good, low is bad, because we're in a bubble market right now. Go back to the streams where I gave that nerd. That nerd told you we have a spot vol. We have a spot vol scenario where now low is bad and high is good because we're in a bubble. And I have a video with a boomer who was talking about this because he was noticing it last week before the bubble popped. All right. And he was like, what? This feels like the 90s again. What is going on here? How come the VIX is going up and the stock market is going up?
Significant rotation underneath the surface. The VIX did climb yesterday back up above 16, but we've seen now multiple closes below 16. So I'm not too concerned about the VIX unless we were to get back over 20. I think it continues to settle down. One of the things that I had talked about probably within the last week or two is that I thought some of the fact that the VIX was so high kind of reminded me a little bit of back in the late 1990s when the VIX stayed high, even though the market was, absolutely flying. And it was because.
There you are. So even the boomers started noticing this. We are now in a regime where high volatility is good for the markets. So it's not wrong. It's because you don't understand that the market has changed. The market has changed. The market is a fluid, dynamic material. The market is not just a singular thing that you can always use the same rules on. And that's what this show is about. That's why I do my presentations, because a lot of you guys probably only expect one thing from the markets. I've been through the 90s. I've been through COVID. I've been through the aughts where gold and silver went up, like George Bush times, oil went up, the commodities bull market. So all these markets have different characteristics. And now we're back into the 90s mode where things are looking weird.
The volatility, which normally is associated with selling, volatility was so great back in the late 90s with the moves to the upside. So it wasn't the downside that was creating the volatility, it was the upside. Just usually we don't see that kind of volatility. And I think with what's happened with the semiconductors here over the last 10 weeks, I think it's been similar to what we saw, kind of like that euphoric atmosphere back in the late 1990s. Now you might say, well, does that mean this is a bubble and then it's going to end like it did back in the 1990s? And I guess anything's possible. I'm not seeing signs that would suggest that at all. But a pause certainly wouldn't hurt. And if we paused, even for a brief period in the semiconductors, I think that could lead to some of those option premiums coming down on the semiconductors, even a little bit. And that, because semiconductors are such a big part of the S&P, that could have a big impact on how the VIX is calculated. So I was kind of speculating that the VIX, it might actually take the market pulling back a little bit to get the VIX to settle down, that we would need maybe the semiconductor group to pause or pull back a little bit. And we saw that for a couple of days. But this morning looks like the SOX right back at it. I'm showing the SOX, the SOXX, which is the iShares semiconductor ETF, up 2.35% this morning. So a lot of the semis taking, jumping again in pre-market action. So we'll see how all this plays out. But I think I'm not surprised. I guess my point is I'm not surprised that the VIX came back down below 16 at the same time that we actually saw a little bit of a pause in semiconductors. Anyhow, that's where we're starting today. Record high territory, VIX coming down, still a little elevated. I think most of the time when you're seeing the S&P 500 moving up 9 weeks in a row, setting new records along the way, most of the time in history, I would say the VIX is generally going to be down below 13. But it's higher. And again, like I said, I think part of it is because of a lot of the volatility, the massive moves that we're seeing in areas within the market, especially semiconductors. All right. So this is a chart that goes.
Yeah, you should follow Tom Bowley. Like if you're more interested in like the boomer type, you just rotate your portfolio a few times a year. He's probably very good for this type of market. For as long as I knew this guy, he's pretty much a tech bull. So we've been in a tech bull market for a long time since the great financial crisis. So yeah, he's probably a good guy to follow for that. I don't know, how he does when the tech market stops being dominant, but so far the tech market in the foreseeable future, I'm assuming the tech is going to dominate the S&P 500. I don't know, right? Even with what I think the oil and energy markets might start taking over a little bit more, I still think tech is going to be the dominant one. So there you go. I have no idea. No idea. All right. Yeah. Yeah, look at Tom Bowley. Yeah, it's Tom Bowley on, let me see, earnings beats. You could get a link on my description on the damn thing too. So on the description on YouTube. But yeah, you could go here. That's his YouTube channel, earnings beats. He sometimes shows up on stock charts. Okay, Tom Bowley. And so let me go to his website here. Let me see, earnings beats. And I could show you guys his performance. I mean, I'm not trying to sell you anything, okay? But he's a lot cheaper than let's say Samantha LeDuc. So if you want some like really basic type of semi-active portfolio management, like somebody that doesn't like move their portfolio around too much, you know, like this guy is probably your guy. You should so if you're really into that type of advice, he would be it, I think. So let me share the screen so I can show you. Yeah, so I can show you his results here, right here. Let's see. So, so how does it compare to the S&P 500? Let's see. Stock portfolio performance as of close of June 11th, 2026. Model portfolio, aggressive portfolio. So these were started in 2018 and 2019. This is, you know, exactly when I started trading around that time as well. Tech was very good. So for somebody that just follows tech type stocks, mostly stays in tech, he's your guy, you know. I think one of the things he really hates is gold. He really hates gold. That's one of the things he missed because he's the guy that was like, dude, I hate gold. I hate gold miners. I don't think they will outperform the S&P 500, blah, blah, blah. So he totally ignored that side of it. Overall, that's okay because, again, semiconductors was always going to dominate at the end anyway. Gold was just a temporary blip in 2024 into 2025. Tech was always going to take over. So that's okay. You know, you can hate gold, no problem there. But yeah, that's one of the things you have to understand about certain people. People have a bias. His bias is very clear. He likes tech companies. He doesn't like to get out of them. So there's going to be a lot of sectors he will probably miss out on, right? Because he's just focused on tech. He'll always favor technology companies than most other sectors. So if other sectors outperform, like this year in February, March, we were in like oil, he'll probably miss all that. He'll miss all that money down there. So that's one thing you got to put in your back of your mind if you're going to consider him. So since inception, 381.32%, 247.17% overall. Okay. Compared to the S&P 500, yeah, it's better. It's definitely better than that. Okay. So that's good. If you beat the S&P 500, you're already doing very good. Very good. So right now, if we look at it from, let's see, the ETF portfolio performance. So this one just uses ETFs. It doesn't have any stocks in it. So let's see how he performs. This is more challenging, okay? Because he's limiting himself to just using ETFs. I don't think he uses leverage ETFs. I think he strictly avoids them. So I don't think he's cheating and using leverage to try to beat it. But as you can see, it's not easy to beat. So S&P 500 up 112% since October of 2020. His model ETF performance is 97.48%. So it's very hard to beat the S&P 500 if you're just using ETFs. Yeah. There you go. Anyhow, you want me to grift? No. I'm not gonna grift. Okay, I'm not gonna grift. I think I get more money studying the markets than grifting. Us OGs get. So yeah, and I don't think I'm teaching you something that you can't find in other places. Everything I'm teaching you can be found in other places. What I'm doing is I'm just taking the best of what I learned into one place. So it avoids a lot of nonsense, I feel like. Yeah, because I wasted a lot of time going through everything just to find the best of the best. Best of the best. And I think that's all I'm trying to do. Everything you could get for free or you could pay other people. Like you could pay for Tom's service, you could pay Samantha's service, you could pay all these other guys that taught me this stuff for free. Wyckoff Analytics, I got for free. So I don't think I should be charging people for something you could get for free. But one of you guys can start working on this more and try to get some kind of like AI system going. I think you get the little bots. I like the bot stuff because I know the Discord has a lot of bots, and I've seen screenshots of people having Discord servers with trading bots and things like that one guy. What's his face? From Figuring Out Money. Like that guy charges $60 a month now. He used to charge $30 a month for his Discord. Now he's charging $60, and he's got all these bots he's set up and things like that. So there's definitely a lot of people out there that can do this a lot better than I can. I'm so old, man, so damn old. So there you go. Very interesting there. That's Tom Bowley. So yeah, he has vocal fry. His voice wasn't always like that. I think he had some surgery. And yeah, his throat hasn't been the same. So he used to not have that vocal fry. Man, being a boomer sucks, bro. And yeah, so take care of yourself, Don't be smoking too much out there. You're gonna get problems with your vocal cords pretty soon. All right, let's see what I got here. Blah, blah, blah. Do I have to explore anything else? No. Damn. Hold on. See how much time I got left. Fuck. See how much time I got left. Yeah, I got some time. All right. I got the articles to read. I have to get through this stuff here. Fuck. All right. Hold on. Damn it. Yeah, I still got a lot of stocks to get through. Okay. Let's get to it. Ross, dress for less. Okay, Ross, dress for less. Great. This one's great. I liked it. I was talking about it before. I still see it doing well. So this is one of those discretionary stocks that are still good. Still good. There we are. Okay. Music. Okay, yeah. So this is what, monthly chart? Man, this is awesome. This one's awesome. This one's been doing awesome. So let me do this 78 minute. So we got this nice range. It popped today. So we already moved up in earnings over here, right? So let me just do this. Let me do this. Man, I don't know. It's really strong. Fuck. Do you want to buy now or later? That's kind of my question with this one. So if you're not in this stock already, so this is the hard part, right? So I have a few boomer stocks. I was like Deere, I got Caterpillar, and now I'm looking at Ross. I'm like, this thing hasn't broken its trend yet. What would be a good place to buy something like this, right? Yeah, McKesson already has like a downtrend. We already saw with McKesson, it's easy to see. It's like, okay, we see a dip, we could get into McKesson. So for anybody that is waiting for something to buy in their long-term portfolio, you got McKesson, right? Okay, let me get my everything log chart here. Good, okay. Yeah, so McKesson already had its dip. We got a nice dip on McKesson, so it's pretty clear. The problem with Ross is not so clear, right? Ross is not so clear, but yeah, Ross is highly recommended. Last chance was like April, and it's gone up ever since. It's like green bars all the way. Like people just want to talk about Micron and whatever, but I like this. It's very smooth. Very smooth. Very smooth. Eventually, I think it's going to have to go sideways one of these times, right? Oh, man. Tough to say. Next one is Casey. Okay, Casey's. This is TK's favorite convenience store. I guess he buys all his pizzas from Casey in the Midwest. So it had earnings this week, and we got a move up here. Very nice. Very nice. Very nice. All right. So that's this one. I cannot say anything bad about. This one actually had a longer move from 2022. Very good stock. Okay, this is where would you buy the dip? Where would you buy? Is there even a dip to buy? A dip to buy? I guess that was a dip last week. So if we look at the weekly, that was the dip before earnings. Great. Now we're back up here again. Wow. All right. No more dips for you again. All right. So KCCASY. And then next one, Cracker Barrel. Cracker Barrel. This one was always on the news for a while here. At the end of last year, we got like a bunch of news. All the conservatives started like going, oh man, they're changing their logo, blah, blah, blah. We hate it now. And look at this. Look at this. Since December 15th, right, on the earnings, we started building this nice range. Nice range. And this earnings, we popped. We're out of the range, baby. We're out of the range. So this whole thing might be a bigger structure coming up. So put that on your watch list. CBRL Cracker Barrel. We might be able to catch a new run. If this is the beginning of a new trend, then watch it for sure. Watch it for sure. So the next several months, I'm thinking like we're going to have something that will have to retest these areas here. So my guess would be it will do something like this. All right, wait for this moving average to move up on the weekly. And then after that, I guess next year it can start flying back up into the 80s, somewhere around this zone here. So this zone here is where we're going to hit the next resistance. That's what I'm guessing it's going to look like. Okay, so CBRL. So you got 3 stocks to look at that nobody cares about usually because it's not tech. They're not tech. ROST, R-O-S-T is in the discretionary. Discretionary is not popular. Discretionary is not popular at all. It goes sideways here. Okay, and a lot of their constituents, Lululemon going down, Ulta makeup going down, right? Yeah, going down. Let's see, Nike going down. Yeah. Okay, so a lot of discretionaries are like that. So Ross is one of those discretionaries that has a nice trend up. And I guess it makes sense. Most people are trying to save their money. So why would they buy anything else around that? If you look at the retailers like Macy's, kind of like the competition, or Nordstrom or something, you know, you can look at that. These guys have been going sideways. You know, there is like a specific clientele for someone like Macy's, but for the most part, it's not growing anywhere. Most people are being priced out, and they're probably going into somewhere like Ross, right? That's where the target demographic is. Anyway, the other discretionaries that are doing okay, like Ford. Ford is doing fine. Ford, GM. Okay, but again, they're just going mostly sideways. Remember last time we were talking about like, oh, it's breaking out. Well, we gave it all back. Look at that. Look at that. Up 16% 2 weeks ago. Last week down 14.5%. I have no idea what this means then. If this thing just continues on down, it wouldn't be a surprise. This will be another false breakout. Just like here. Just like here. This one could have been, I guess, a potential false breakout. But yeah, Ford looks like it's going to go sideways. GM? How about GM? GM should do better than Ford. Usually GM does better than Ford. Yeah, this is better. It's better. some kind of trend is there a little bit, not very strong though, but there is some attempt at trying to go up. But we'll see if this sideways means it's going to go up later or not. The other one is Tesla, right? Tesla's put in the discretionary group. Same problem there, right? This one is a lot more messy. Let me get rid of this. Let me just get this. I just draw too much on this one. Hide all. Yeah, you can imagine GM on here, right? So let me put in GM on it, over it. Or actually, let me do this instead. Let me do GM, and then I could draw Tesla next to it. And you can see the similarities. New price scale. Okay. And let me get rid of indicators. Okay. You see the similarities, huh? The only difference is that like Tesla has a bigger percentage move up and down compared to GM, but pretty much the same. So therefore, Tesla is a car company. Despite what you might think, it moves in sync with GM. Okay? So that's why I'm not interested in Tesla as a stock. I can find more exciting stocks in other places. Tesla is essentially just a more volatile GM. So, right? And if I put in like Ford, it's going to look different. So Ford sucks. So a lot of people on here, if you talk about like Ford sucks, just look at the stock. The stock tells you that it sucks. I don't need to ask anybody outside if Ford sucks or if I should. So should I buy a Chevy or should I buy a Ford truck? Well, there's your answer right there. Stock market told you the answer. Anyhow, that's done. Okay, we're done with that. Moving on to the next one. This one's fun. This one's a fun stock. UNFI. You guys know what this one is? This one is a major supplier of Whole Foods. So Whole Foods, which is owned by Amazon, gets a lot of their foodstuffs from this place, UNFI. So if you are just bullish on Whole Foods, you can get the same thing by putting money into UNFI. You're not going to get it from buying Amazon stock, okay? Amazon stock is mostly driven by its AWS and retail business on the e-commerce side, right? And I know there's some crossover with the e-commerce with Whole Foods, but if you just strictly want to have something that has heavy price action on Whole Foods, then UNFI is the one you want to get into. 30% of their customer base is just selling things to Whole Foods. And the reason I bring it up right now is because look at the earnings reaction we had, I guess this week, right? So after earnings, we went down and touched that area, and immediately it went back up. So I guess we had an initial bad reaction. We got back up here. So put that on your watch list. Put that on your watch list. Either it fails and goes back down here to the lower level, okay, around 30, or it holds here before moving on up. So watch this carefully. So it's hanging around 50. See what happens after next options expiration. So after the options expiration next week, watch what this does into July. If this thing just holds itself well in July, then we're ready to move on up to the next level. But maybe you don't want to put your neck out because there's like a lot of risk in the market overall going into October. But for sure, you should pay attention because not often you have like a bad initial reaction and then a move up like this. Okay. So if you look at Micron, you kind of have like that crazy move as well. You have like a lot of wild earnings reaction. So let's look at the last time we had a crazy earnings reaction here. me see. So this one, right? So after earnings in March, we had this move down here. We went down here and then we moved up, and then we just went down to the bottom of the range that was built up. So this one, we had a move down, we moved up, and we failed, and we went down to the next level. Okay, so if we look at something like UNFI, we would expect it to do the same thing if it fails that level. So this one is a lot more aggressive. This is over 2-3 days. So we had like earnings reaction, goes down here, we move back up. So if this thing fails again and we break this, then the next place to buy would be down here at 30s, right? The 30s. If we survive, if we somehow survive this and we keep staying at this upper level, this is the new range. Then we start doing this, and that'll build up energy for the next level up. Okay, because this is over 2 days. Micron was over like 1 day, essentially 1.5 days before failing. This is 2 days of a strong move. We were up like, let's see, a total of 25%. Okay, 25%. So you go down like 20% and you go up 25%. You have to take that as a signal, as a very strong signal of something happening here. So I guess the initial reaction was wrong. Whatever they said was wrong. I have no clue. I did not look at the news. I did not look at the call transcript. You might as well look at it. But UNFI caught my attention. So UNFI. So these four now. You have Ross, Casey, Cracker Barrel, UNFI, United Natural Foods Inc., UNFI. Those four put on your boomer list right now. So that's going to be added to my boomer list. So eventually I'll keep growing my boomer stock list here. Something that you can buy and hold and keep on for a while. Okay, let's go to Intel. Okay, let's go to Intel. Intel was a boomer stock. I don't think you could say it's a boomer stock anymore. But let's say it is. Okay, like I said, it's going to go to 200, 180, 200 will be the next level. Maybe 160. Okay, maybe at best it's going to be 160. I don't know. But those are the targets I would expect for the mark indicators right now. Okay, so that's what I'm looking for. Okay, so we already went over Intel INTC. That's enough. Okay, this is no longer the boomer section. We're just going to go through the stocks we've discussed for trading. AAOI still looks good. It kind of had a bad day these past several days. Okay, so it still hasn't really gotten to the top of its range. It's got to get above 200 before we could say something is happening. But I'll keep it on the list. I'll keep it on the list though. Teradyne, it's in the middle, 50-50. I don't know, 50-50. It has a wide range. I don't like that. So TER. This one's better. Air's my favorite. Look at that. See, I was drawing this like for the last couple days, right? I said like this. Once this thing pops, we have a lot to go. I'm going to have to look at the DeMark, I suppose, to figure out where exactly this would want to be. I could look at the point figure too, do the point figure on this guy. So no problem, you could do it. So there's a range here from April till now. That's what you're going to be looking for. Okay, so ALMU, this one's uglier, but it did go up a lot today. But still, I don't like it. Oh man, this is too risky for me. But if you want to bet that it can break out, you can just pay attention to what it does over at 24, 22. It should try to make its way up. Okay, so that's up to you though. A-Lab's a lot better. A-Lab, this one's a lot better. This is exactly what you want to see. A-Lab is probably the top tier looking one. A lot better than AOI. Okay, better than Air, AEHR. So A-Lab, A-L-A-B, Astera Labs. Yeah, the chart itself looks good. Okay, CRDO. I think Pixie Poo is in this one. Still looks good. This one looks good. Perfect. Today was a perfect confirmation. Perfect confirmation right here. of the resistance. So it broke out. So CRDO probably going up next. All right. So next one, HYLN. Looks good. This looks good. We were talking about this the last couple nights. So now I'm going to talk about VST and VRT, because VRT, VST kind of is related to this. All three of these are in different parts of the AI infrastructure ecosystem. So VST is more like the utility side. They provide the power. It's not exactly, obvious where we want to be, but we've been testing this 138 for a while. February, May, June. So VST, put it on your watch list. Maybe this is it. Maybe we're ready to go. So this is more utilities, right? Then you have HYLN. HYLN is more like the modular side, so it's more closer. It's just going to be more closer to the AI itself, the AI data center itself. So watch this, right? HYLN. And then after that, it's the VRT. So this one is actually inside the data center. This one does the water cooling and the power distribution inside the data center. Okay, so VRT is that next level. So all three have something to do with data centers and AI. And I guess, you could tell from each of the shapes of the chart, you can see which one might be more valuable. Okay, so perhaps HYLN is the more critical part of the whole AI data center, or maybe it's just because they're a smaller company and they have like something that everyone needs. So right now it's easier to pump its stock. I don't know the main fundamental reasons for it, but they all look different, right? Utilities, it makes sense. The utility side is more boring, so VST would look more boring. And the next one up with the VRT, okay, makes more sense. That will be looking more interesting. So I don't know why exactly HYLN has the strongest looking one so far after April 30th. But yeah, you might want to look into why. I'm sure like if you Google search each of these three, you could probe and discuss why one of these is better than the others. I looked at like the actual valuations. I think, yeah, VRT and HYLN are similar. They're very expensive. Like they have like 30, 60, like 30 to 40 or 60, depending on which one you ask, which AI you ask. Forward earnings per price to earnings. Okay, forward price to earnings. All right, done. Okay, gotta get through this quickly. Okay, we got DocN. DocN still looks okay. So this software still looks okay. So even after Oracle puked, this one is still surviving. What's the other software companies that are still surviving? Cybersecurity. Once again, everybody's running back in there. FTNT up today. CrowdStrike up today. So all these guys everybody's going back into again, huh? Palo Alto Networks, huh? There we go. So the strongest software companies are still the strongest software companies. Everybody that ran out are running back in. So it doesn't matter. You can try to pick something else like Adobe or something. You're probably not going to get anywhere with it. So how about Okta? Okta, we were looking at like potentially this one would try to make up itself here. No, we're still stuck below this resistance. So this area is still trouble. We're still underneath 119. So no go there. MDB, MongoDB. Maybe this one still has some room to go. Let's see what was I thinking? I think like, yeah, if it can get up to this level at 416 from 358. So it was dancing, right? Before getting slammed back down, highly volatile. Okay, so unsure. This one's not really obvious where it wants to go. If you just look at the daily chart, though, you probably would be like, yeah, I'll take a shot at buying here, right? The moving averages are moving up. You tested this level over here, right? This level is being tested. Good. So you might say this is a buy, just to try it out. If you look at the weekly, though, it's it's not very clear at all what it's doing. Yeah, this is not clear. This is not clear. You got some kind of crazy huge range here, which is inside a bigger range, right? 141 and 536. Good luck with this one. Good luck with trying to interpret this one. All right. I think we covered MSTR and GDX at the beginning. So good luck on you guys that want to play that. But yeah, I think there's a good chance, a good shot that maybe this is the way to go. I think with GDX, it's more dangerous than MSTR because there's a potential it could go down to 67 next week, right? I don't know what the Bank of Japan is going to say with the guy replacing the other dude. So Ueda is in the hospital. We got a replacement, temporary replacement. And then we have new Matt Walsh. He's going to talk for the first time. That's going to affect gold a lot. Okay, Israel. Let's look at Israel. Israel, I noticed, was doing good this week. Oh, very good. So we got 10.91% for Elbit Systems, ESLT. So we got defense company here. And if we look at the overall, there's 4 ETFs for Israel. 4 ETFs for Israel. EIS, ISRA, ITEQ, and IZRL. I think EIS and ISRA are like the main ones. So they have a lot. They're more broader. But if you just want for the tech side of things, then the ITEQ and the IZRL, this one, ARC Israel Innovative Technology. So those two are going to have more technology side to it. But if you just want the drones by itself, then there's only one company listed for America right now, ESLT. Okay, so this one probably looks like it wants to go up. I don't know. Okay, last one. This one, we're just gonna go through this one real quick, as fast as I can. So we were talking about this new company here. So Tropes was the one that mentioned it. HWM, Howmet Aerospace. And I said like, oh, well, it looks like it wants to go sideways maybe, right? Well, we got a good week right now because we were up 6%. So let's see if we can poke out of here. Can we poke out of here? Okay, this will be important because there are very few aerospace and defense companies that have a good looking chart. So I picked out some other ones. This one does airplane parts. Okay, I don't know why it specifically has a very good outlook, but it's a very strong chart here. Now you got like CRS. This one does titanium parts for airframes. So CRS is even better looking defense and aerospace company. So it's up 16.3% today. So this one is better. So titanium right there. We have ATI, similar business, titanium parts as well. Okay, they might do different parts from each other. So ATI, CRS, look at that. Why is it doing this? Something to look at. So you got 2 stocks to look at in along with HWM. Now we have another one, HEI. I don't know. I just picked these next ones to round out what the rest of the defense companies look like. So this one, it's more of a range. You could see it's doing that. You have GE, okay, aerospace, also more of a range here right now. We don't know. Raytheon, how does that one look? Also, yeah, you could say this is a range, right? So most of them have already got stuck. They've gotten stuck since the Iran war started. This one, Boeing, yeah, Boeing's been in a range for a long time, you know. This thing is a range all the way out here, basically. Might as well consider this whole thing a range, right? So yeah, so there you go, that rounds it out. And then I also mentioned this week EMBJ is not really defense, but it has its business is more in the civil aerospace. So I just use this as a comparison because it's a smaller version of Boeing or Airbus. Okay, so I'm just using that as a comparison. And you could tell like right away it had a good trend. You know, I do like this stock. I have a long-term position in this one, but it hasn't really been doing anything since January. Honestly, it's been going sideways like this. But it was a very good stock to get into once it broke out of this zone here. You can see. So since 2024, it's been doing well. It looks like I'm going to be stuck here for a while, up and down. So put this on your watch list. You might be able to catch a nice dip when it goes back down to 47. Who knows? I mean, the difference between 77 and 47 is huge, right? But when you look at this long-term move, this is all part of a long-term move, then that's not a bad place to get in before it rockets back up. So there you go. So EMBJ Brazilian. I'm sure there's going to be political implications. All right. This is a problem with owning South American stocks. South American stocks, politics plays a large part into how well a company does, because government loves to interfere with companies down there. So another one like is SQM. Like, this is a Chilean lithium stock, but again, I like this company, but it gets interfered and gets touched by the government in charge in Chile. So will it break this? I don't know. Like, the lithium stocks I would recommend is SGML. Okay, this is Canadian. So maybe it's the time to buy down here. So SGML, Sigma, lithium. And then the other one is another South American. It's Lithium Argentina. Okay. And I believe it's related to. So yeah, it's a good price here, around $9. But I think it's related to LAC, so Lithium Americas. So this is more American owned properties of lithium. But again, this one's not really doing so well. Okay, so Lithium Argentina is doing better. I believe they used to be one company or something like that, or I don't know. One is a subsidiary. You guys can look it up. I don't pay attention too much on that. But I remember a lot of people were asking me about these stocks, and it's like, well, lithium was a hot commodity down here back in the 2020s into 2021. And all this was because the Chinese were dumping a lot of lithium into the market, lowering lithium prices. And then they stopped doing that, okay, around September and November. So that allowed lithium to recover. So that's why you see like this breakout here in January. So yeah, if this thing tries to get back into the 6 area, that's definitely a buy. So you could start buying here and wait and see if this holds, or you could wait a little longer. But I would probably, in the next several months, I'll be looking to buy anywhere in this range. I would be buying lithium back up. All right. Okay, that was a little side note. I don't know why I went to lithium. Blah, blah, blah. Okay, let's go back to HWM. I want to talk about HWM again. So it's in the aerospace and defense company sector, right? So ITA is the ETF for aerospace and defense. There's another one, XAR. They have a different mix of companies. Smaller companies are probably more represented in XAR than ITA. And then there's another one, PPA, which has more smaller companies, and they try to distribute the influence, because I think ITA is influenced too much with Raytheon and Boeing right now. A lot of these ETFs are few companies dominated. So these other alternative ETFs like XAR and PPA try to spread out the influence. And then there's another one, SHLD. I don't know what this one it does that's different from the others. I'm guessing it says global on it, so maybe it has more international stocks. Okay, so SHLD. Now let's go back here. HWM. So this stock is doing well, right? HWM. Now I want to do ratios. I want to compare it to the ETFs. So I want to compare it to ITA. How does it do compared to ITA? Yeah, it's doing better than the other companies in its sector, okay? So when I look at it, I see a range here, a breakout here. So overall, it's doing better than the ITA itself. All right, so how about the XAR? XAR okay, similar look. Maybe not as strong compared to the ITA one, but yeah, similar look. So I could say like, yeah, it matches to being slightly better than the defense and aerospace companies. All right. Now, how do I look at the industrials versus S&P 500? So let me go to the monthly chart here. Monthly chart. If you look at the industrial sector versus the S&P 500, there's really no edge here, right? Compared to just buying the S&P 500. So most people, they would avoid buying industrial stocks if they just looked at this. If they just looked at this, they would be like, how come I just don't buy the S&P 500 and just ignore industrials altogether? So most people would just ignore industrials just by looking at this chart. There's not much of a gain to doing that. If I look at semiconductors divided by like S&P, there's an obvious reason why people would rather buy semiconductors, right, than the S&P 500. There's a real obvious reason right here. It outperforms. It just outperforms. And that's why back in last March, I was just ignoring everything else and just going semiconductors, because this was very strong. This last leg right here. This last leg. So this one right here, this move right here was the strongest. Right? This move right here was the strongest. Right here. Compared to the other moves. This one was slower. This one was slower, right? In the 2022 one here, this was slower. This was slower. So let's see. Let me get this one. So this one was slower. So this one was more aggressive. And then the most recent one you could see is like insane. It's really insane. So most people wouldn't even touch this stuff. So if we go look back at the XLI, let's go look back at the XLI. We want to see something change here for us to be more bullish on XLI. I think from a fundamental level, XLI is overpriced. I think that's what I saw from its historical levels. People saying like some of the stocks here are overpriced. Probably Caterpillar, Deere are the ones that I like. They're probably going to say that's overpriced. I don't know, right? But there's no trend. There's no trend of it moving up right now. We don't see like industrials outperforming the S&P 500. Okay, but at least it's going sideways. That's the only thing we could say about it. Now let's look at like how the defense companies and aerospace companies do compare to the XLI, so overall industrial group. So now we got this picture here. We're like, oh, okay. Well, it looks like aerospace and defense have been outperforming since last November 2024. So 2 years, we've been going up all the way into the Iran war. So that's what we see so far here. All right. Now, how about the XAR versus industrials? This is more shallow, but pretty much the same picture. Probably around April of 2024, we've been outperforming the industrials. Okay. Now let's look at it compared to the S&P 500. How do we look now? No. Right. We've given a lot of the performance back. So last couple months here, we've been giving it back. So let's see. Ever since we got war with Iran, we've been giving it all back. So people that were buying here, all the way here, probably already knew there was going to be war. So they were already buying. Once we had news of the war, they started selling. So that's what you see, sell the news. That's why they say sell the news. They sold the news. The people that were buying already knew what the news was ahead of time and were accumulating here back in 2024. I'm sure they already knew Netanyahu wanted war. They already knew all that. Once Trump got elected, it was like, oh, well, it's easy. They're going to have war again eventually. So they just buy it all up. And then once you get the news, you get out because we're done. What's the next step? The next step is we're going to build a new range. We're probably going to build a new range here before the next war. So the war with China. So here I would say that you should start probably building up your positions again for the war with China. So that's what I would be watching for. So if this is a start of a new range, maybe the range is up here, I don't know. They're going to build it for the war with China, and the war with China will probably start around like what, 2029, 2030, 2031, something like that. But that's probably what's going to happen. Okay, so that's why people shouldn't look at the news. By the time the news is out, people are selling into strength. They are selling what they got already to you, the retail trader, the retail investor. You guys get the news, and then they're selling into you guys, right? That's what it is. It's just like gold and silver. Like, they're buying gold and silver in preparation for inflation. Once you get the news that inflation is going back up, they're selling to you, the retail trader, the retail investor. So that's why gold is going to go sideways now, right? That's why I said in February, gold is going sideways, because once people already expect something, it's already over with. They're selling into you. All right. Got it? Okay. Blah, 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 blah. Okay, I'm in lots of chats. Oh my God. I'm done. Done here. Done here. How much time I got left? Okay. I got to read all these articles. Oh man. Let me look at your chat, see if anything. I remember back beginning of the year, you mentioned tech will bear, get oil, aluminum materials about to bull, uranium, any of those plays. I mean, because, yeah, those plays are still happening, but now it's all adjusted, right? Everything got pulled forward. Everything got pulled forward. All those things were going to happen throughout this year into next year, but everything got pulled forward. And then now we have the AI bubble to deal with in the meantime. So yeah, it's pretty much the same, except that now we have to do it with the backdrop of an AI bubble, right? So everybody's been betting on the AI bubble to pop for how many years now? So now AI bubble has to be pushed back into next year or 2 years. So all the oil will go up again. Aluminum has been up, right? Aluminum. So the ticker's scrolling underneath you guys. What was that? So let's look at the main bad boy, aluminum, Alcoa. Yeah, Alcoa is still good, right? It's still moving up. It just has to break this resistance here. So if you got aluminum, those two other companies with the titanium, yeah, titanium's up, then aluminum should be up with it. Yeah. And then what's the other one? Kaiser aluminum. Kaiser aluminum. Yeah, this one's better. Yeah, this one's up like 3% this month. It was up 7% today. Yeah, it's still strong. I don't remember when I started talking about all this stuff, but I've been mentioning aluminum on and off. I think it's up to you guys to decide if you really want to buy it up here. I mean, it would have been better if you got in back in March, right? Back or February, somewhere around there. But it's kind of like this right now. We're kind of at this point. You're going to probably have to wait. I don't know. But yeah, aluminum, definitely. Uranium is more tricky. It's way more tricky. Copper, I don't remember what copper looked like here. Yeah, copper's been sideways these fast few months. Yeah, so. No, hard to say about copper. Copper, you can wait. But aluminum's been popping. Oil, we already were in oil. We're going to go back into oil later. Nickel, let me see nickel. Okay, nickel. Let's see, nickel, Sprott. Nickel miners, ETF, NIKL. Nope, nickel, nope, not ready yet. I also talked about wheat and soybeans and all that. Let's see how wheat's doing. Nope, it went back down. Yeah, so there's still time. No, not in a rush. We got all this AI stuff. That's more important. I don't think like like, yeah, you need to really care about what nickel and oil and all that. That's not important. Okay, Mama the Duke mentioned UFO a while back. Might be good if people get. Yeah, I'm sure it is. Once the SpaceX IPO, yeah, if you want to gamble. Palladium. I don't know if it'll do better than gold right now. So palladium. See, what's the ticker that I usually go for platinum and palladium? I forgot. Because there's one company that I usually go to. Palladium. Platinum. PLG, I think, was the ticker, right? PLG. Let's see. Platinum Group or PTM? Was that it? Let me see. Let me see if I recognize this. So this is in a Canadian stock exchange. So they definitely have a ticker in the American stock exchange. Wait, platinum. So Platinum Group. That was PLG, wasn't it? Man, did they delist? Holy fuck. Oh, that's a shame. They went back to Canada. They ran away from the Americans. Oh my god, what happened? Well, I guess you lost the stock. That's the one I would have used. I guess if you're Canadian, you could still buy that stock. I don't know what happened there. What the fuck happened? Platinum Group stock. Let me go to Google. Let's see what happened. Yeah, PLG. It should still be there, right? How come the TradingView doesn't have it anymore? Don't know. Oh my god, really weird. I mean, I should type in PLG. It should be here. What the hell? Come on. I don't see it anymore. That's crazy. Come on, dude. What's this? Oh my god. Did these idiots... Oh, man. Okay, TradingView is doing this weird thing where they're grouping all the ticker symbols into one ticker symbol. So look at me. I just typed in PLG, but if I didn't expand this menu, I wouldn't see the real PLG I was looking for. It would just default to the Canadian PTM. It's like, bro, who changed it? Who changed this? This is the worst idea for a user interface. Who changed that? Oh my god. Should I send a nasty email to TradingView or something? Because that's not a good way to do things. Dude, if I typed in PLG, I wouldn't even see it unless I expanded it, because the default is to hide it. And I would accidentally click on this stupid Canadian ticker, and I'll probably be scared because it'll be quoted in Canadian dollars and I wouldn't even know what the heck I was looking at. Bro, this is not a smart way of doing things. Okay. Anyway, yeah, it's PLG. It's PLG for the Americans, okay? I don't know if any of you guys are Canadian and you're watching this show, but you should already know your own stock ticker. But for Americans, this is PLG, all right? If you're bullish on platinum, palladium, yeah, it's the same thing as gold. It's the same problem, right? Right? It has the same structure. It looks about the same. I don't think it's much different. I don't know if you think if you get into platinum, it will move more than gold itself. Because if you're using leverage GDXU, I don't think you need to risk it and put it outside of GDXU. You already have GDXU. You don't need to put in platinum, palladium. Okay? Yeah. Anyway. Okay, anything else? There's an AI drone. Oh, there's an AI drone stock or ETF coming soon. Yeah, I think you did mention it before. Yeah, I think you did. I'm not sure if it's out there yet. Let's see, bro. If Intel moons, I'll name. Okay, well, whatever. Oh, if it moons, dude, there's no guarantee here, man. There's no guarantee here. I just give you what I see. Anyway. Let's see, what else? Car companies will sell subsidized cars for... Yeah, maybe. That's interesting. I thought there was a company that tried that business model. You know, they would pay cars to advertise stuff, and they'll subsidize your car or something like that. I thought there was a company that already did that. Yeah, SpaceX is going to open live tomorrow. Yeah, we're gonna talk about that pretty soon. I'll show you an article where some lady is getting a loan just to buy more SpaceX stocks. Let's see. Blah 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 blah. Ford has some sus AI facial tracking shit they're pushing. I'm probably sure there's a lot of car companies now that are doing this. Let's see, Macy's went bankrupt previously. I haven't been following Macy's honestly that much. CMG. Oh, you're talking about like Chipotle, CMG. Casey sells more pizza than basically anyone not named Pizza Hut, and Domino's is one of the largest pizza chains. Yeah, I didn't know that. I didn't know Buc-ee's IPO. Yeah, I'm not in the Midwest, so I don't know, or Texas or anywhere. So these things are new to me, honestly, until I heard like King TL. I mean, King TL was the one talking about like getting his boner pills from Hims. That's what made me stay in Hims for longer, you know. I would have been done with trading Hims if it wasn't for him. I was like, oh man, what the heck? You're buying boner pills from Hims? So a lot of good information you'll get from just talking to regular old people, and it'll make you interested in a stock. You'll be like, damn, Casey's? What the heck is Casey's? Why is this guy always buying pizza from it? Anyhow, yeah, Cracker Barrel. We know like the Thorpes love Cracker Barrel. Yeah. Yeah. And then we know about like Sonic too from D-Dog. Let's see. Don't you think buying into Ross would be too late into the move? Yeah, maybe. I don't know though. It looks like it's been late for a long time, but it keeps going up. It's kind of tough when you have a stock that strong. Very hard. What guy doesn't invest, he just sells puts. Tax loss harvesting. Once we get a little teach dodging game. Oh my god. Yeah, tax dodging is a whole nother level of thinking. Blah blah blah. Let's see. Yes. Okay, good. Caught up. All right, let's blood for SpaceX, dude. TK was on them. Honey packs too. I don't know. Yeah, but that's your typical consumer, though. You know, that's a typical consumer. Like a lot of people. This is why I sold. This is why I sold my what was it? Carvana, like, you know, my Carvana, because I bought in Carvana near the bottom, or pretty much at the bottom, I'm guessing. I don't remember now. And I made like a 3-bagger on it. It went up 3 times. But I sold early because I'm not the intended consumer. I'm not the guy to buy a rental from a company, right? I would buy a rental directly from a person. That's how I would buy a used car. And so I wasn't the target consumer. And so I underestimated how strong and how lazy people were to use us extra service to buy used cars. All right. And I think, you know, like the other thing too was that like used car prices were going up as well. So it was kind of hard to gauge at that time during COVID lockdowns. It created this little bubble in used cars that I was really unsure how that would affect things on Carvana. But yeah, I bought down here right when it was like $4 or something. It popped to 30. It already had a split, so now you're seeing a split price. So it went from 0.7 to $3.76 around here. So I mostly played this move, and then I didn't pay attention anymore. It was the bull market was coming back, and I was gonna look at other stocks. I just forgot about Carvana. And the last time I checked on it was down here when it was up at like at this kind of like this resistance zone. And so it was like, oh man, Carvana's still doing good. Maybe I should buy here. But then I just forgot about it again, right? Because there was so many other stocks. But if I did get back in here, it would have been a great trade, because like you could see, it got all the way back to this former resistance zone. That would have been 1,000% trade right there. From this point up. Had I just like kept holding it from here, that would have been great. That would have been great. That would have been like a 8,000% right there. So again, you shouldn't let your bias affect you. A lot of people would not even barely look at Ross or Cracker Barrel or Casey's or whatever, right? They would totally ignore like a chart that looks good or about to look good, about to turn. They would just ignore it because they just want to chase what's fancy. What's fancy now is like, oh, Tesla. They always go back to the same ones, right? GameStop. GameStop's been boring since forever. Why do people still want to talk about GameStop, man? Dude, there are so many other stocks these past 5 years, man. Why you focused on just one stock and stay there, right? If you look at GameStop, there's a clear level. There is a clear level here. There's a clear level at 25 to 30. There's all this area here where if you can't break it, you're not going to go anywhere. You're really not going to go anywhere. The last 2 times we tried to go somewhere, December of 2024 and May of 2025, we just completely failed and came back down. So it's always been like this. And I know like what they're going to do. What did they say they're going to do? They're going to do AI now or something? I don't know. Everybody wants to do AI. Even Cracker Barrel wants to do AI. And it's popping. So all you got to do is GameStop. All GameStop has to do is say they want to do AI, and this thing will just shoot back up again, right? But before that, it's not doing anything here. So, well, okay, yeah. Maybe you're going to try to go for it. The last thing they were trying to do was try to buy eBay, right? So I have no idea how that's going to go. Are they really going to get eBay? eBay's been saying, no, we don't want you to buy us. So I don't think that's going to pump this stock. So the next option is to do AI or something. That's pretty much the only way it's going to get anywhere. So eBay's doing fine by itself right here. I don't see this stock being depressed. I have no idea why they think they could buy eBay, but okay, whatever, dude. All right. Good luck. Good luck with that. I don't see any weakness. Yeah. It's called the Boyd Index. Yeah, we could do a Boyd Index, right? Where people mention different items, right? Sprinter van, right? We could buy Sprinter van. Then you'd be like Daimler, Chrysler, and GM. Let's see what those stocks will do. The Thorpe Sprinter van, that'll be it. Okay, good enough. All right, guys. Wrap up there. We're going to see an IPO tomorrow, so let me read this article before I leave. I had a lot more articles to read. I don't know how many of them I can get through, but we'll go from this and that. Let's see. Let me get back here. Okay. All right. Okay. All right. We got this one. We got that one. Let me read 2-3 articles to get through. Okay. Let's see if I can get through these articles. All right. Okay. All right, guys. Let's get to it. Okay. We got debts. We got debt. That's another one we got to get into. Then one more. We're going to do the SpaceX article. All right. Good. Debt article, SpaceX article. All right, let's go. Okay. Okay, all right. Okay, all right. All right, I think that's enough. Okay, that's enough articles. Okay, SpaceX IPO whips Musk fans into frenzy. The more, the better. All right, let's go down here. Anna Watts, a 33-year-old public relations manager in New York, has stashed away $6,500 to buy SpaceX stock after it hits the market Friday. If she had her way, she'd buy even more. She tried to borrow $5,000 from her best friend and applied for a bank loan too, but both turned her away. Watts has been a fan of Elon Musk since she bought a few shares of Tesla, his other publicly traded company, 2 years after its 2010 IPO, and watched them go on to soar as his turn him into the world's richest man. So like thousands of others, she's eager to get a piece of his bigger follow-up act, one that bundles artificial intelligence, satellite communications, and even long-shot hopes of colonizing Mars. The more the better, Watts said. There is no such thing as too much when it comes to investing in one of the most ambitious companies that's ever existed. Few companies have generated as much buzz ahead of their market debut as SpaceX, which is set to raise about $75 billion this week in what could become the largest initial public offering in history. Part of that is by design. Musk's courtship of his die-hard followers since Tesla's early days has given him rock star status and lent a gravity-defying quality to the car company's stock. Now he's looking to replicate that at SpaceX by reserving 30% of the shares for retail investors, triple the amount that's typically allocated in IPOs, which tend to give an inside track to hedge funds and other big money types. That's helped generate excitement about the IPO, even as worries about a potential AI stock bubble sow unease on some corners of Wall Street. A whole group of other space-related companies has gotten swept up in the excitement, and at brokerage firms, the SpaceX orders have been pouring in, with demand exceeding the amount of stock being sold more than 4 times over. Brian Mitchell in Indianapolis is among those planning to buy. The 48-year-old marketing executive intends to invest several $1,000s in the IPO. He has already poured tens of thousands into Barron Partners Fund, which holds a stake in SpaceX. This feels like the appetizer. You have to believe in Elon, he said. I'm willing to overpay for it just to say I'm part of the thing. Yes! Bubble time! I can't wait, man. This market is going to be great. The 90s are coming back, baby. There are plenty of risks. While SpaceX has a leg up in the space race through its rocket launch business, government contracts, and satellite-based broadband service Starlink, the company's $1.8 trillion valuation rides heavily on its more speculative prospects. And space ventures are particularly risky, which was underscored recently when Blue Origin, SpaceX's Jeff Bezos-backed competitor, saw its rocket explode during launch. SpaceX, roughly $19 billion of annual revenue, is akin to what's brought in by lackluster companies like Dollar Tree or AutoZone. What? You're dissing Dollar Tree and AutoZone? Oh my God. See what they're doing here? They're trying to poo-poo your boomer stocks and tell you sell everything and buy SpaceX instead. See what they're trying to do? They're trying to low-key prime your brain to want to buy SpaceX. They want the bubble to happen, man. And they want you to sell your Dollar Tree and AutoZone. That makes me want to buy Dollar Tree and AutoZone instead. That's it, man. I'm going to buy more Dollar Tree and AutoZone. And it will take considerable spending to reach goals like building data centers in space. XAI, its artificial intelligence arm, alone burns through $1 billion a month. Anyone I have talked to who may end up investing has said their main reason is Musk's Midas touch, said Dick what the heck? Who names their kid Deck? Deck Mularkey? Bruh, this is a fake name, right? Come on. A managing director at SLC Management, an investment firm, the payoff could be far away. Yeah, sure, whatever, Deck. Sure. All right, Wall Street is rushing to fund the AI bonanza in every conceivable way. Okay, this was written in June 8th. Funding rounds and IPOs raising 11-figure sums, blockbuster bond sales spanning 3 continents, the casual announcement of an $85 billion equity raise. Such is life on Wall Street. At the dawn of the artificial intelligence build-out, tech companies are hungry for cash to invest in data centers, and investors are forking it over through all possible means in all parts of the globe. A flurry of fundraising that has mostly supported markets by powering technological advances, even as it tests their ability to absorb it all. Google's announcement, Alphabet, that it would raise $85 billion of equity was just the latest example. SpaceX, Anthropic, and OpenAI are poised for public listings that could make this year the biggest ever for money raised through IPOs. Meanwhile, the so-called AI hyperscalers, Alphabet, Amazon, Meta, Microsoft, and Oracle have issued $159 billion of bond globally this year, up from $108 billion all of last year and just $17 billion in 2024, according to Dialogic. Data center developers have raised billions more in the high-yield bond market, while upstart AI cloud companies are borrowing from banks and private credit firms to fund purchases of chips. You know, recently we had a rejection from SoftBank. SoftBank wanted to get loans for OpenAI. It got rejected. Okay, so the Japanese were like, hell nah. Meta was trying to tease a stock share release, you know, like Google did, and the market puked on it. There was a bunch of letters written to Meta saying like, dude, we're just gonna sell your stock right here, right now, if you do that. So there's a lot of pushback from the stock market. So outside of Google, which got a better response because Berkshire Hathaway, you know, was going to buy those shares, so that kind of gave it more confidence. But most other companies, it hasn't been good. Oracle, yesterday, you know, after the earnings, that's what they said. They wanted to issue more shares. All right, and that's pretty much why Oracle went down. Everybody wants more debt, but the bond market doesn't want that. The bond market says hell no. So now they're going into the stock market trying to offload their debt to you, the shareholder, by diluting your shares. So I don't know how this is going to go down here, but as we see, we're already having a lot of these damn bubbles here caused by the private equity and the credit markets. Okay. So this is where the debt is coming. Global bond issuance by big AI tech companies. You see how we are right now in 2026? A lot more than what's been happening the previous 10 to 15 years. Plenty of investors still think that the AI build-out could get messy, with companies overspending and Wall Street eventually weeding out the losers. In the meantime, increased equity issuance could pressure stocks by diluting shareholders, one possible factor behind last week's tech sell-off. Still, demand from investors has generally defied the skeptics so far. The extra return that investors get for holding U.S. companies' bonds instead of the ultra-safe treasuries is hovering near multi-decade lows. Tech stocks in the S&P 500 remain up 31% this quarter, with many citing encouraging fundamentals, such as businesses surging spending on AI tools and the recent news that Anthropic would turn a quarterly profit ahead of expectations. I think there's been a few signals that have become more positive for the AI infrastructure build-out, said David Lefkowski, head of U.S. equities at UBS Global Wealth Management. That's helped give investors more confidence in the return prospects for the investment. Tech shares rebounded Monday, lifting the NASDAQ composite to a 0.9% gain. Well, we know how that lasted. All right, spending on data centers and other AI infrastructure by just 4 big tech companies this year is expected to total more than $670 billion. So that's almost $1 trillion right there. You just need 330 more billions, and you got it. You got it, baby. A larger investment as a share of the economy than even the railroad expansion of the 1850s. That scale has raised worries that Wall Street is inflating a bubble. Of particular concern are questions about how profitable it is to maintain the likes of OpenAI's ChatGPT, Alphabet's Gemini, and Anthropic's Claude, the products at the heart of the investment boom. More investors have long had faith that AI models could eventually be monetized, but that optimism has grown this year with the rise of Anthropic, which has focused on subscription-based coding tools for businesses. The company is poised to double its revenue to $10.9 billion in the second quarter, at least temporarily exceeding the hefty cost of training and running its models, the Wall Street Journal has reported. OpenAI and Anthropic have each raised more than $100 billion in venture capital financing. Established tech giants like Alphabet and Amazon initially funded most of their AI investments with the gusher of cash generated from their legacy business. But the daunting expenses pushed all of the hyperscalers but Microsoft to the bond market last year. This year, they have gone international. Alphabet has issued bonds not only in US dollars, but also in Canadian dollars, Japanese yen, euros, Swiss francs, and British pounds, the currency in which it issued a rare 100-year bond. Would you buy a 100-year bond from a tech company? You think that company will be around for 100 years? The company is also borrowing $1 billion for energy financing in the California municipal bond market, according to a preliminary prospectus filed last week. Amazon was poised to issue Canadian dollar bonds on Monday after issuing bonds in the US dollar, euros, Swiss francs earlier in the year. While big tech's borrowing binge has raised comparisons to previous credit booms that went bust, a key difference is that many of the companies are now involved are hugely profitable. Reflecting that strength, the extra yield or spread that investors demand to hold 10-year Alphabet, Amazon, and Microsoft bonds over U.S. Treasuries is still below that of the average investment-grade corporate bond. The spread on Meta bonds is slightly above that average. There are exceptions. Oracle, which has issued $43 billion worth of bonds since last September, is projected to burn tens of billions of dollars over the next several years as it tries to transform itself from a leading software company into a cloud computing giant, leasing out the vast clusters of advanced computer chips to OpenAI and others. Though rated investment grade, its bonds has traded more in line with the highest tier of speculative grade debt. So Oracle bonds are essentially junk bonds, and that's what caused the problems last year in October. So I'm not sure if after earnings, the bond market is happy with what they heard. I guess we'll see into next week, but it took several trading days before the Oracle earnings started affecting the whole broader market. So be careful out there, guys. I mean, you got the SpaceX IPO, but you still have to worry about the bond market. If the Oracle bonds are going to go crazy again, that might start a problem again, okay? Overbuild risk isn't going away, and that risk is generally reflected in hyperscaler bond spreads, said Jordan Chafflin, a senior analyst at research firm CreditSight. Still, Oracle's bonds have rallied recently, along with the broad investment-grade market, despite plans to issue at least $20 billion of new shares. Its stock is also up 8.7% this year. Well, it's issuing even more shares, and it's going down right now. Yield premium. Okay, this is the yield premium CoreWeave. So this is the CoreWeave bonds compared to treasuries. Okay. Investor sentiment has improved while more drastically for the speculative grade CoreWeave, a former Bitcoin miner turned prominent AI cloud computing provider. At one point last year, the company's ability to borrow in the bond market was in question after a steep sell-off in its shares and bonds following news that it faced data center construction delays. This year, though, CoreWeave stock has rallied 43%. Okay, well, whatever. And spread on its bonds have tightened to around 4 percentage points. All right, enabling the company to raise more than $20 billion through sales of stock and debt in 2026. So, all right, well, it's looking a little bit better. Can it improve, though? At this point, even some skeptical investors say there's little point in betting against the AI boom when it happens, when it appears to be just getting started. Eventually, it is likely that companies will build too much AI infrastructure and stock prices will fall, said Ayako Yoshioka, senior investment strategist at the wealth management firm Wealth Enhancement. Now, though, there's still time to invest because this build-out, the scale of it, is just too large. Too big to fail! Is that what you're telling me is too big to fail? All right. No. Let's go back to Korea right now. Let's go back to Korea. Margin call, margin call. You guys went and bought loans to buy Korean stocks. You got margin called. So margin call liquidations hit 166.2 billion won. The Kospi's sharp decline and record high debt-fueled investments trigger largest liquidation in over 2 years. So if everybody is going to go get loans, asking their friends, asking the banks, asking anything for a loan to go buy SpaceX stock, and the SpaceX stocks are starting to go down, 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 down below where they bought it, what's going to happen? It's going to be a margin call. We're going to get a margin call. The Kospi has experienced a roller coaster trend, leading to the largest scale margin call forced liquidation of the year. Margin trading refers to an ultra short-term credit transaction where investors borrow money from securities firms to invest in stocks. If investors fail to repay the borrowed funds, security firms forcibly liquidate their stocks through margin calls. With debt-fueled investing with borrowed money nearing a record high, the market's volatility has triggered a historic scale liquidation. According to the Korean Financial Investment Association on the 9th, the scale of margin call forced liquidations in the domestic stock market on the 5th amounted to 166.192 billion Korean won. This surged from approximately 33.2 billion won on the 1st, 16.8 billion won on the 2nd, and 24.3 billion won on the 4th. It marks the largest scale in 2 years and 8 months since October 24th, 2023. The Kospi soared to 8,801.49. Oh man, it almost hit 9,000, dude. Almost. On the 2nd, but fell by 1.8% and 5.5% on the 4th and 5th, respectively, dropping to 8,160. However, it plummeted another 8.3% on the 8th, closing at 7,484. Since margin traders are exposed to forced liquidation if they fail to repay borrowed funds within 2 trading days, analysts suggest that record scale margin calls likely occurred on the 8th as well. Domestic debt-fueled investment has reached near record levels. As of the 5th, the balance of credit transaction loans stood at 37.8384 trillion Korean won, remaining close to the all-time high of 38 trillion won recorded on the 29th of last month. A source from the financial investment industry stated, with debt-fueled investment at a record high, increased market volatility inevitably leads to large-scale liquidations. So I'm hoping SpaceX doesn't implode and we all are going to die, but I think the American stock market has a bit more to go. So yeah. So this was the news I was talking about earlier. Japan's central bank deputy Uchida is in the spotlight while chief is hospitalized. So Ueda is out. We'll handle a highly anticipated news conference next week, okay? As Governor Kazuo Ueda will miss the upcoming policy meeting where the central bank is expected to raise rates that would take borrowing costs to levels unseen in 3 decades. So you gold guys, better watch it. Silver, gold, whatever, watch it. This is gonna matter. what this guy will say. Okay, we're not going to get the regular guy. That guy's in the hospital right now. I'm not sure if that means anything, but be careful out there. Everyone is agenda and narrative peddling. We're in the post-news era. Yeah, that's it. Everything is agenda and narrative peddling. Everybody wants to do something to juice the markets. When they want it to get juiced, they want everyone to get scared. When they want them to get scared, it's just how the game is played right now. Yeah. All right, bros. I'll see ya. I'll see you tomorrow. SpaceX will have its IPO. I don't know what time during the day it will have its IPO. I'm assuming it's just going to be at a random time because they have to prepare everything during the day before they unleash the ticker symbol. So the ticker symbol, if you're interested, is SPCX. SPCX. Please do not confuse that with Virgin's SpaceX or whatever it's called. Let me see. Like a lot of idiots were getting into the wrong ticker already. Yeah, there was this ticker here, the Virgin Orbit or whatever they called it. That's the wrong ticker, bro. That's the wrong ticker. Oh, damn. It's from a suspended account. Oh, man. Someone got suspended. Anyway, I guess you won't be able to see it. But Space, Reddit, X, confused the SpaceX. Yeah, so people on Reddit confused the SpaceX ticker to space. So Virgin Galactic, SPCE, people were already buying SPCE thinking it was SpaceX. They pumped that stock up. So all the Reddit guys were in space, were in the wrong space. Dude, it's not even IPOing yet. Why are you guys getting into that? Oh my God. So don't underestimate. Don't ever underestimate how many clueless, stupid, moronic people are out there. It's very easy to pump and dump, and don't get caught, guys. So don't confuse SPCE with SpaceX. SpaceX ticker symbol is SPCX. All right. Please don't buy the wrong ticker. All right. Yeah. I shown a clip of the network. That's a very good example right there, the network. I played the critical scene. If you go and look up the network and on YouTube, I'm pretty sure it'll come up with that scene as the first thing on there. All right, guys. Yeah. So the network. Anyhow. All right. We're done here. All right. See you guys. I'll see you tomorrow. I don't know what time. Maybe I'll wake up early in the morning if something interesting happens overnight. But we'll see. The only thing that people will report tomorrow is the Michigan Consumer Confidence Index. I don't know how much that will affect things. It will open 30 minutes after the close, so around 10 a.m. Eastern. Okay, so that's around 7 a.m. my time, Pacific. They will have a little bit of data, but we already went through PPI this morning, CPI yesterday, and they really didn't do anything to the market. The market still went sideways, so no real importance given. Nobody gave any thought to it right now. I'll probably talk a little bit about the inflation tomorrow, maybe a little bit. I'll talk about the sticky inflation numbers and the future nowcasting for future inflation. But it looks like we will have about a 3.3% inflation on the PCE reading. So we're definitely not going to 2% anytime soon. We're stuck at 3.3 for a while, and we might go a little bit higher maybe for a short while. But anybody that thinks that we can go below 3% on inflation and stay there is going to be wrong. We're probably going to hang around 3 to 3.5 to 4 4 if worst case comes on over the summer. So did Oracle have any impact? Not that I saw. Oracle just fell on its own for now. So the last time Oracle had an impact, it took several days before the bond market started panicking and freaking everybody out. So yeah, it took a lag before we saw any effect on Oracle. Right now, the semiconductor index completely ignored it. So Oracle wants to issue more debt. Oracle wants to issue more shares. No problem so far, today anyway. I don't know if that's just because of Trump saying like, oh yeah, we got a deal now. Okay, whatever, dude. Doesn't matter. So for now, we're safe. Maybe won't be safe by Monday, but we're safe for now. All right. So let's see how SpaceX goes, and then next week it will be Matt Warsh on Wednesday. Matt Warsh will report his little thing on Wednesday. Also, the Bank of Japan next week as well, probably around the same time, either Tuesday or Wednesday. I don't know, before or after the U.S. Fed reports their thing. So we'll have to wait. We'll have to wait for that time. And then we'll remember next week, Juneteenth will have no market. Okay, market is closed on the Juneteenth on Friday. So that means options expire on Thursday, and that's why every hour is so critical. Every hour is so critical. We wasted about 2 days this week going sideways, and next week we already lost a Friday. So whatever happens between now and the Thursday is going to be so critical. All right. So if you're looking to have a place to buy or to get an entry, be careful. Be careful in the next few days. It's going to get really wild, because we have very few hours left during the day to trade.